the demand was never satisfied. There's been a lot of manipulation in the market, entering into the housing market. This is causing a big shift in real estate. It's causing a demand for a certain type of product. Hello, my name is Svyatetskiy, your local San Antonio, Texas real estate investment specialist. Today, I'm talking and discussing a subject many people are missing. It's almost like they're turning a blind eye to it. This is a huge thing in the real estate industry, and this is going to be either a make it or break it moment for many people as far as getting ahead, as far as breaking through financially and establishing a very well set off future for you and your family. Stick with me till the end. Today I have a subject for you. I will go on a little rant, but what I'm trying to do is bring attention to a bigger problem. People are talking about interest rates, people are talking about economy, inflation, but if we look at it as a bigger picture in the context of everything, and we look at the housing market, we look at the time we are in as a society, and also the different generations, the shift that's happening right now with the wealth transfer, with the baby boomers and then the millennials, baby boomers that are going to be downsizing, who are making a lifestyle change because of the age, those big houses, all of that stuff, that they might need to downsize, and then the millennials at the same time who are now entering into the housing market. This is causing a big shift in real estate. It's causing a demand for a certain type of product, and at the same time, when you have this huge rise in demand, if the supply is not keeping up, then you have a problem on your hands. And today I will be talking about this demand issue that we have. There's been a lot of manipulation in the market, and we're looking all the way back before the shutdowns happened. So just to kind of draw and illustrate a bigger picture, because the point today that I want to prove is the demand was never satisfied. So there's only two ways to really solve a big demand problem, and it's to really ramp up production of supply. Because when you don't have enough supply and too much demand, that causes prices to go up. There's no way around it. And so the way to fight it is to increase supply. But what we've been doing, and we've actually been doing something that's counterproductive, is we've artificially stopped demand by putting up this big block of interest rates. And at the same time, the people that are providing supply, they're looking and they're like, are we going to be profitable? Because the demand has been stopped. Real estate transactions have fallen. People are no longer buying. Should we continue to build? So artificially, when you stop demand, at the same time you stop supply, and what you're doing is you're not resolving the problem. What you're having is now you're having this more and more built up demand, because people have to live somewhere. Friends, we can't get around the fact people are going to live inside of four walls, under a roof, with AC and heater, a kitchenette and bedrooms and bathrooms. People will need houses, whether it's apartments, whether it's condos, whether it's, single family, luxury, whatever. People will have to live somewhere. And whether you're renting or you're buying, you're an owner, that's another question. But we have to agree on one thing: people will have to live somewhere. And so what's going on at this time is we have literally, instead of resolving the problem, we think by raising interest rates, we're going to resolve the issue of prices going up, but we're not. Because as the demand fell, at the same time, the builders stopped producing as much. So we were already behind so much. We were already behind. I believe it was like 5 million homes nationwide. We are short. There's not enough. People continue to have babies. People continue to enter America, whether it's legally or illegally. And now we have this generational shift. Baby boomers need to be moving, either downsizing, going into facilities, selling their homes, But at the same time, you have millennials, the biggest generation, entering into the housing market. So how are we going to resolve it? Well, let's resolve it this way. Let's just stop, no shift. Baby boomers need to be moving, either downsizing, going into facilities, selling their homes. But at the same time, you have millennials, the biggest generation, entering into the housing market. So how are we going to resolve it? Well, let's resolve it this way. Let's just stop demand. No, that's not. Unless you do it this way, you stop demand, but you incentivize the builders to build. But that never happened. Builders were never incentivized, so they cut production. And now you have this false hope that, hey, if we raise interest rates, the market is going to fall and it's going to create prices that are more affordable and it's going to stop inflation. I have bad news, friends. As soon as the mortgage market corrects, when the Fed says, hey, friends, we've had enough, we proved our point, we showed the public that we're not ignorant, we did something, we can take our finger and point it at some numbers and say, hey, look at this, we solved the problem. As soon as that happens, and the public and the market is just going to get a smell of lower interest rates, that backed up demand is going to break through this false dam of interest rates, and this huge flood of buyers is going to enter the market. And what is it going to do? It's going to create even a higher, crazier raise in values of homes, and I'm going to explain why. Pre-pandemic, pre-shutdowns, the market was healthy, economy was strong, things were moving forward. And what happens is this, unforeseeable thing comes in. We know what it is. It shuts down the economy. So we have manipulation happening with the economy. The government is they don't know what to do. What are we going to do? Let's inject a bunch of capital into the economy to prop up the economy so everything doesn't collapse. And so we have trillions of dollars that are just being injected into an economy without the economy actually moving. So we got manipulation number one there. And what does that cause people? First of all, those shutdowns caused a lot of people to think and ask the question, am I living in the right place? Are the local state laws, are they favorable to me if this happens again? This sets up a huge migration of people to Texas, to Florida, North Carolina, Tennessee, all over. And so West Coast is seeing a reduction in population, and these other markets are seeing a huge influx. So what's going on there is there's a higher demand, there's more capital, and regular people like you and me maybe don't have huge cash reserves. What are we doing? We're looking for a home, but we can't compete. After everything kind of opened up post the shutdowns, just the market took off like crazy. People were predicting something that was going to crash, but it went in the opposite direction. And at the same time, massive hedge funds, you have these big investors who are coming into the market. In our market locally, we had maybe 25 to 30% of our inventory being bought by investment. Whether it's small investors, large investors, but it was not first-time buyers. And so what's going on is that demand, it was never satisfied because of the competition. That crazy competition where people were writing offers 150K, 200K over asking price for some properties. Many people weren't able to keep up. And so what they did, they said, hey, we're going to wait till this market cools off a little bit. And so what you have there is you have backed up demand, people that never got their shot at the real estate market, people that still need their first home, millennials that need to get into the market, people that need to just get a place to live for their family, whether they're coming from out of state or they're in the state. And so that's number one, demand not satisfied after shutdown, after that boom. and you have backed up buyers that need to get into the market. Next, what's happening is we have the Fed stepping in after they artificially kept those rates low, trying to prop up the economy. That backfires on them. Inflation goes through the roof, and now they're saying, what are we gonna do? And of course, the resolution is simple. It's quick. Let's raise interest rates. Let's do the easiest things we can. Turn that dial a little bit and raise interest rates. And what does that do? Many people are priced out. So what's happening? People that wanted to buy during the crazy market, now they can't get into the market because they're priced out. They can't compete with these high interest rates. Their jobs are not sufficient to buy these type of assets, these type of homes. And so you have this double unsatisfied demand for the seller's market now during high interest rates. And friends, I did a post on Instagram about this. It's a picture of a dam, and you have this raging river, which shows us the buyers that need to get into this market. And this dam is these high interest rates. And really, they weren't satisfied. I'm repeating myself again. You can't take care of a problem by just keeping the problem behind a wall of interest rates. You have to ramp up production. You have to get builders to start building more homes. You have to incentivize the builders to build property so people can buy. And so what we have to do is we have to look at it differently. And friends, what am I coming to as a conclusion? As soon as that mortgage market corrects again, economy starts, right now we have a solid economy. Unemployment is low. And so you have people that are still making money, but a lot of people are just afraid. They've listened to all the negativity coming from, those people that are pushing and pushing and pushing, this doomsday, I don't know what to call it, heresy. And that's causing people in the demand to be backed up for even more and more and more. And so once that market corrects, friends, what do I see happening? I can't give you timelines. I'm not going to say it's going to happen in 6 months. It's going to happen in 8 months. But when it does happen within the next 24 months, that market that you saw in 2021, it's going to return, and it's going to return with more force. Because all those people that were not able to get into a house for the last prior 4 to 5 years, and the builders, they turned down the dial of production. So now we're falling even further behind in availability of homes. What's going to happen? That's going to cause that supply-demand ratio to go off again, and prices are going to shoot up. And so this is just something I'm talking about. And if you have questions about this, if you have concerns, if you're trying to get into the market today, as somebody who is still buying real estate, I say it's a good time to get in, because now you can ask for concessions, you can ask for repairs, you can ask the seller to buy down your rate, and you can bring that rate down. And so you actually, as a buyer, have the ability to negotiate, and that is something that's very valuable. If you don't take advantage of it now, what's going to happen? As soon as the market corrects, the mortgage market corrects, all those people are going to jump back in, and it's going to be that crazy market again, 10, 15 offers in a single home. So if you have questions, I'm your local real estate expert in San Antonio, Texas. I do a lot of investment real estate, first-time home buyers. And so reach out to me. My contacts will be below in the description. Let's figure out how to take advantage of this market and get you a good deal.